Hey, what's going on YouTube? It's your boy back once again, the stock dude, back with another hot video. Now, if this happens to be the first time that you are coming to this channel, I ask that you please take the time to hit that subscribe button and also turn on your notification bell. That way, when the next hot video comes your way, you won't miss a thing. Let me ask you something. How many rich people do you know that like to just waste money? Let me think. How many rich people do I know that like to just waste money? I can't think of any rich person that I know that likes to waste money unnecessarily. Now, I'm saying that to say this. You don't get to be rich by spending money unnecessarily. Now, a lot of times rich people will do things just for fun that may be unnecessarily done, but they don't just waste money. So if someone has accumulated wealth, their intention is to, number one, keep that wealth, right? Number two is to have that wealth grow. So if rich people can find a way to invest in stocks, in good companies at a cheaper price, don't you think that they will do it? So if they do it and they're the rich ones, why wouldn't you do it? Why wouldn't I do it in order to accumulate wealth? You find a way to buy stocks at a cheaper price, why wouldn't you take it? So on this video today, I'm gonna give you not one, not two, but three little known investments that you can use that will pay you a dividend just for owning the company's stock. Now, everybody likes one of these right here. Everybody likes a big sale. Can I get an amen on that? Huh? I thought so. Everybody likes a big sale. So I said I got three investments for you that are little known. And I love when I find out about something that the average person doesn't know. Because anybody that knows me knows that I'm not just the average person. So I found out about these three investments that I'm going to share with you. But before we go any further, like I always say, I'm not a stock expert, nor do I play one on YouTube. So anything you hear on this channel or any other channel, please do your own research. Please do your own due diligence before you put your hard-earned money at risk. Now, these three investments that I got, the third one is actually on sale. What it says on your screen is a big sale going on with this third investment, which means the price of it is lower than what the company is actually worth. So if you hang around to the end of the video, I'm gonna give you that third one proudly. I just purchased shares in this third investment on Friday. So without further ado, I'm gonna introduce you to this little known investment. And this little known investment goes by the name of, drum roll please, they call these investments closed-end funds. Got it? Closed-end funds. Now, a lot of people haven't heard about a closed-end fund. Now, closed-end fund is something similar to something that you probably have heard of, and that is a mutual fund. But a closed-end fund is so much better than a mutual fund. Matter of fact, a closed-end fund is like a mutual fund that's on steroids. It's not even close the amount of money that you can make off of a closed-end fund compared to a regular mutual fund. Now, a lot of you probably have mutual funds in your 401k. Nothing wrong with that. But I guarantee you one thing. I bet you that mutual fund in your 401k doesn't pay a dividend that's high as these three investments that your boy about to show to you. Closed-end fund is a collective investment model based on issuing a fixed number of shares, which are not redeemable from the fund itself. Once again, a closed-end fund is a collective investment model based on issuing a fixed number of shares, which are not redeemable from the fund itself. Now, what does all that mean? Simply put, in other words, a closed-end fund is a managed fund where the company only has a certain number of shares that are available to trade in the stock market. Got it? They only got a certain number of shares. Once those shares are issued and bought in the market, guess what? There are no more shares in these funds. What they have is what they have. Once they're gone, that's it. They don't do what's known as a public offering. A lot of companies do what's known as public offerings, where they'll issue shares of stock in the stock market. Then when the price gets high, they'll decide to do what's known as an offering. That public offering is where they issue brand new shares and they flood the stock market with brand new shares. Now you're probably wondering, well, what does that mean if you invest in a company and they do what's known as a public offering? What it means is, just to give you an example, you may buy shares of a company's stock at $10 a piece. Shares may go up to $12 a piece. Got it? Company decides when the share price gets higher, they decide to raise cash for the company. So they'll do what's known as a offering. So when they do an offering, they'll flood the market with additional shares. That public offering floods the whole market with additional shares. And just like anything else, once you have an overabundance of something, the price goes down. So you might have bought shares in that company 3 months ago and paid $10 a share. Now they're worth $12 a share. But guess what? After that public offering hits, more shares flood the market, and the prices of your shares may only be worth $7, $8, or $9 because the price generally, not all the time, but generally goes down because more shares by that company floods the market. Why I like closed-end funds is because, number one, they are a actively managed investment. What I mean by that is that mutual fund that you probably have in your 401k, that one that you invest in and you don't even know what companies are in that fund, yeah, that one. That mutual fund, more times than not, is not managed. In other words, it basically just means that when you get a job, you sign up for that job and you let the company know how much money that you're willing to invest on payday. Y'all remember that form that you probably fill out when you first got the job that you work right now? You let them know, oh, I want to invest 3% of my pay into the 401k. Then once you do that, they automatically pull money out of your check before you get it, and they just automatically send it through the mutual fund and invest in the fund that you chose when you first got hired to go to the company and work. Problem with that is Ain't nobody watching the money. Nobody's doing nothing with the money. It's on autopilot. They just send it to the mutual fund every time you get paid. You get paid every week. Every week, the amount that you chose to go to that mutual fund, it goes. You get paid every 2 weeks. Then every time you get a check every 2 weeks. Whatever amount you agreed upon when you got hired, it automatically goes. It doesn't matter to the company, the mutual fund company, or the company that runs your 401k, whether or not you make money at all. It doesn't matter to them. It's on autopilot. It's nobody watching that money in your 401k mutual fund right now. You probably didn't know that, but they're not managed. In other words, nobody is overseeing the fund's holdings, whether they're going down in value or whether they're going up. Nobody's watching it. So why I like closed-end funds is the fact that closed-end funds are actively managed, which means that somebody is taking care of your investment. When you invest in a company through a closed-end fund, you got a fund manager basically that works for you, watching your investment, watching your money. Don't that make more sense? Wouldn't you want an investment vehicle that somebody is actually watching it? If you got a mutual fund, it's like you riding in a car in the back seat and you don't even know who it is that's driving you. You in the back seat sleep and you don't know where you going. That's what you got in your 401k and you don't even know it. But that's why the stock dude is here. I'm going to tell you how this stuff works. Because if you take the time to tune in to my channel, I'm going to take the time to make sure that I explain how a lot of this stuff works. Because I've learned a lot. And I do mean I've learned a lot since 2008 during the financial crisis. Just like you, I lost a lot of money as well. But one thing about me, when I make a mistake or something comes my way that I don't handle well or don't understand, I try to make sure that I use that and learn from that. I ain't gonna get burned by the same fire, but only one time. Now, these closed-end funds, once again, this is how they work. These funds gather money from various investors from all across the country. Then they issue shares of stock to regular investors like you and like me that will enable us to invest in certain companies in the stock market through the closed-end fund. Now, why I like them, this is why I like closed-end funds, because it's a cheaper way to invest in high dollar stocks. Give you an example. Apple. A lot of people wanted to wait and invest in Apple after the stock split. Reason being, Apple stock was $400 and something a share, maybe more. When it split, the price went down to around $100 and something a share. So instead of paying $100 per share, like I said at the beginning of this video, let's invest like the rich. Why pay $100 a share to get a piece of the apple when you can pay $15 a share, $20 a share, and purchase one of these closed-end funds, get paid a dividend, and you invest in high dollar stocks like Apple, Tesla, Microsoft, Amazon, Google. You can invest in those companies for a fraction of the price with these 3 little known investments that I have for you coming up right now by the name of closed-end funds. Also, if you like the content that you are hearing right now, and if you haven't done so yet, I ask that you please take the time to hit that subscribe button and turn on the notification bell. And do your boy a favor. Leave some comments in the section below and let me know which one of these 3 little known investments that you like the most. Without further ado, the first one goes by the name of Aberdeen Global Premier Properties Fund. Now, the first thing that catches my eye is this. See where it says dividend percent? It says that Aberdeen Global Premier Properties Fund pays a 10% dividend. Now, for those that don't know, 10% dividend means that Aberdeen Global Premier Properties Fund pays you 10% just to own shares in their company. Think about it. Unless you on a corner running from the police, I don't know where would you get a 10% dividend just for owning shares in a company that's a closed-end fund. Aberdeen Global Premier Properties, they giving it to you. 10%. That's why I like them. The second closed-end fund goes by the name of Calamos Global Dynamic Income Fund. That's a lot to say, but I like that. I just bought some shares in this on Friday as well. Calamos Global Dynamic Income Fund. Check this out. The dividend that they're paying at Calamos is 9.9%. Calamos pays a 9.9% dividend to you just for owning shares. Once again, I picked up some Friday. I suggest that you pick up some. Calamos. Look at the share price. The share price of Calamos is only $8.48 a share. Let me say that again. I don't think you heard me. Shares of this closed-end fund by the name of Calamos Global Dynamic Income Fund. Let that sink in. Just the name of this closed-end fund just gets me warm in the inside. Just the name of it. The name of it is Calamos Global Dynamic Income Fund. Don't that just give you goose pimples? It only costs $8.48 a share. $8.48 a share for a top-notch closed-end fund. A lot of people don't know about this stuff. That's why I like when I find out about something that the average person don't know. Man, I left my job doing things that the average person had never heard about. Rolled out. That's why I'm here now, bringing it to you. And I'm giving it to you like free cheese. Giving it to you. Nuggets. Calamos Global Dynamic Income Fund. Share price $8.48. Now with this closed-end fund, you get a 9.9% dividend. And once again, a dividend is just the money that a company pays you as a shareholder just to own the stock. Think about it. If you buy Apple, you're not going to get a dividend of almost 10%. Apple shares are over $100 and some for one right now. Their dividend payment is nowhere near 9.9%. Apple shares are over $100, probably over $120 for one right now. Look at this. Calamos Global, $8.48 a share. Now, it's another website that I'm going to take you to that will tell you how much the dividend payment will be. Now, these investments, the first one, Aberdeen Global, this one, Calamos Global, each one of these three investments, and I still haven't got to the best one yet. Got one more. Hang around to the end of the video for that third one. Just hang tight. But they pay a monthly dividend. They pay you as a shareholder every single month. Now I'm going to take you to this website called the Dividend Channel. And I'm going to show you how this stuff works. This right here is Calamos Global Dynamic Fund's dividend payment schedule. See it? The last payment they made, which was 5 days ago, on the 13th of October. Today is October the 18th. The last dividend payment that they paid was 7 cents per share. And this is coming to you every month. Now I know somebody out there is doing this. Like, man, 7 cents a share? You don't make no money off of 7 cents a share. I know you thinking that. I can hear you. I can hear you thinking that. Coming through the internet. I'm going to tell you how you do make good money off of 7 cents per share. The share price right now is $8.48. See it right here? Price, $8.48 a piece. Let us say you have 2,000 shares of Calamos, and each share pays you $8.48 is the share price, and each share pays you 7 cents. So you got 2,000, and each one of them is paying you 7 cents per share. That's $140. 2,000 shares, and each one of the shares you're getting paid 7 cent dividend per share. That's $140 a month for 2,000 shares. $140 a month for 2,000 shares of Calamos. Multiply that times 12. That's $1,680 in a year's time. $1,680 in 1 year's time just for owning 2,000 shares of a company called Calamos. Now, you can beat a lot of things, but I don't know if you can beat that. And 2,000 shares, the price is $8.48. To buy 2,000 shares, yeah, it's going to cost you a little money. It's going to cost you almost $17,000. Now, some of y'all probably want to, well, where am I going to get $17,000 from? That's a lot of money. I ain't got $17,000. I'm going to tell you where you do got $17,000. Not all of you, but most of you. Your 401k. That 401k, if you have been working for 10, 15, 20 years or more, I guarantee you that you probably have $17,000 sitting in your company's IRA account through your 401k. Nothing wrong with having it, but I know what, that mutual fund that you got, that $17,000 or that $30,000 or that $100,000 that you saved up for retirement, I guarantee you it ain't performing like this. So what you can do, just a suggestion, and once again, I'm not a stock expert, nor do I play one on YouTube, but let us say that you transfer some of that money out of your company 401k into your own IRA account, preferably through TD Ameritrade. I like TD Ameritrade. Always give them a plug whenever possible. You can transfer funds out of your 401k through your job into your own trade account, TD Ameritrade, or one of your choice, and you can buy this. So you can't say you don't have the money. Chances are you do. The money's just sitting in another place, but it ain't performing like this one. So just consider that. From your boy, the stock dude. I told you I was going to look out for you. Just consider moving some of that money into your own IRA and get you some of this dividend payment. So the third close-end fund I want to introduce you to goes by the name of Next Point Strategic Opportunities Fund. I purchased a few shares of this one as well on Friday. Now, Next Point, this is the one that I had in mind when I showed you this right here. Big sale. Next Point is on sale right now. This one is on sale. And the best part about it that I didn't even mention yet is on sale, and it pays a dividend payment of, wait for it, 12.9% dividend. Wait a minute, let me get this straight. It's on sale, and it pays almost 13% dividend. And look at this stock chart. You know I like to look at the stock chart. If you notice this stock chart right here on the bottom, you see the months of the year. February, March, April, May, June, and so forth. This right here, this big influx of volume right here, y'all see it? That right there, that just happened on Thursday. Today is Sunday, October the 18th, 2020. This just happened on Thursday. And y'all know how I watch these big volume spikes because they tip you off. They tip you off and let you know what can happen in the future. This big influx of volume came in, and it looked like it came in at almost 2 million shares that were bought on that particular day. The average volume is only 248,000 shares. On Thursday, you had almost 2 million shares bought. That's telling me one thing. It's telling me that the institutions, the big money investors, those millionaire investors, the rich folks that I was talking about at the beginning of the video, they are interested in Next Point Strategic Opportunities Fund. So like I said in the beginning, you don't get to be rich by unnecessarily spending money. So if they are interested in Next Point, if they are interested in Calamos Global, and if the rich are interested in Aberdeen Global, shouldn't you be interested as well? Look at it. Next Point Strategic Opportunities Fund only trades at $9.30 per share. That's not a lot of money, man. I don't know any other way to put it. That's not a lot. And it pays almost 13% dividend per share. I'm the one known as the stock dude. I hope that we learned something, and I hope that we got some insight today. So if you enjoyed what you heard, once again, I ask that you hit that subscribe button. Turn on your notification bell. That way, when the next video comes out, you can come back and see us again. I'm the one known as the stock dude. Holla at your boy. Peace.